Good morning, traders. Welcome to the Phoenix Blue morning update for Friday, the 8th of April. I'm Tom Colley, and I'll be taking you through the markets this morning. Let's start off with the news announcements, particularly focusing on the last 24 hours, when we've had the three most significant individuals to the markets speaking at one point or another. We had Governor Kuroda of the Bank of Japan speaking overnight Wednesday, Thursday. We had Mario Draghi speaking yesterday afternoon, and then Janet Yellen, the chairman of the Fed, spoke in a round-table meeting with previous Fed chairmen later on last night. Now we'll look at these individually reflected against their relative currencies, or their respective currencies, in a moment. What have we got to look forward to today? Well, we've got to be aware of manufacturing production figures for the pound, and also employment and unemployment figures on the Canadian dollar. Okay, over to the charts themselves. This is the US dollar index. This is the daily chart. Focus on what Janet Yellen's been saying over the last week, 10 days or whatever. She made comments last week which were significantly more dovish than she's made recently. That led to a strong sell-off we can see last week on the dollar index. This week we've had the release of the FOMC minutes from the last meeting, and then she spoke last night in more hawkish terms than she had done the week before. She talked about the US economy being in a good state. She talked about the economy not being a bubble economy. And she really suggested that things were moving in the right direction for a much more positive picture than had been or appeared to come out of the week before. Are we now going to see, after this big low test bar here, are we now going to see the market or the dollar finally move away from this level, or will it fall down to the levels that Mark was talking about on the video yesterday? Obviously, we'll just have to wait and see on that. Over on the Japanese yen, US dollar JPY chart, this is the weekly chart. We had been trading lows here, which we believed were intervention by the Bank of Japan. We had been somewhat disappointed because we expected these highs to be taken out and the yen to be significantly weakened. However, the intervention or potential intervention from the Bank of Japan at these levels was into the headwind of a devaluing dollar, making the job much harder. I assume that the Bank of Japan were hoping to have a tailwind in that respect, in that they'd have an increase, a strengthening US dollar to help their objectives. After the last 24-48 hours, where the consensus appears to be that there will be no intervention. Not that the previous intervention would stop, because that's never been openly admitted. That has led to a fall in the yen. Now, one of the reasons potentially behind this at this time, or the timing of this, may be political. Japan is due to hold the next G7 meetings of the major industrial powers or financial powers of the world. There is a Group 7 agreement stroke policy that members don't intervene in their own currencies. So potentially any more intervention at that point could have been be seen as being embarrassing for the Japanese. So that may have been a reason that the intervention has ceased, or part of the reason. If we go over and look at the daily chart on the yen, we can see the price has been falling all week, but we had a really big fall yesterday. We've got a couple of orders in place here that are at technical levels. Sorry, I'll go back onto the previous weekly chart. These are the orders through here. They relate to this high over, really, is May 2008 over here, and a more recent one over here to the June 2014. With two orders in place there. As I say, these are technical levels. When the markets are as unpredictable as they are, a cautious approach is to place trades at technical levels, very significant technical levels, because they still remain relevant even when there's political central bank intervention and other things going on. What we did see yesterday was a strong fall, certainly through the early morning. Yesterday, we looked at the charts to this developing or developed channel, and we were looking for opportunities intraday to trade this short. What was happening here? Potentially this is the Bank of Japan unwinding their intervention gradually. They wouldn't just step aside and let the market plummet. That would send the wrong message and would possibly make the picture worse rather than better. We had expected and hoped that we'd see this continue further to the downside, giving us further trading opportunities. We'll be looking for the same again today. As I said, we have technical levels up here. If there were a significant pullback, we're not necessarily expecting that to happen, but as everybody knows in these markets, we don't know exactly what's going to happen. Those levels remain valid irrespective of what happens. Okay, over on the euro, Mario Draghi spoke again yesterday, very much the same. Mark spoke on the video yesterday about this level here. If we see this level broken, we believe we'll see significant upside. As with most of the charts, we've had a volatile week, but really we're very much where we were with the exception of the yen, because there has been, let's say, political or intervention from the Bank of Japan there. Most of the other markets actually at the open today on Friday morning are very much where they started on Monday. So not a huge amount to report there. Okay, over on the Nikkei, this is all we'll look at in the Far East at the moment. What we've had is obviously the market selling off. It doesn't like the strengthening of the yen. It makes exporting, which is very significant to the Japanese economy, more difficult and less profitable. However, we did seem to overnight have put a bottom in that downward movement. We've got a low test bar on the weekly chart here. And at the time I took this slide, this is the little daily where we'd actually got an engulfing candle, or depending how you technically describe that. I like to look at the opens and the closes rather than the highs and the lows. But a significant picture that there's a bottom on the market on the Nikkei. Does that mean that there's a bottom or on the dollar yen chart? We'll have to always wait and see, but it could indicate that. Okay, that's really all I've got to say on the charts this morning. What you're looking at is what we call our pure analysis. This is just one of the techniques or systems that we use here at Phoenix Blue. What we do is we look to trade from clean charts based on price action and horizontal levels. We don't use lagging indicators. We look to buy and sell with the banks, the market movers. We trade only with a fundamental bias. We also use the commitment of traders analysis. If you don't know what this is, please just drop us an email at info@phoenixblue.co.uk, and we can open your eyes to that and maybe help you bring that into your trading to make it more successful. We tend to use a 40 pip stop loss for most of our FX trades. This is because of the techniques that we offer. We have a very tight stop, which means you can have a less profitable scenario in that your wins will be bigger relatively than your losses. Means that you can be profitable with a smaller number of wins. What we look to do here is to take people who are already trading to some extent and are maybe just struggling to break through a hurdle or whatever, and we look to improve your results by focusing on only taking trades when the probability is highest. Now, if you've got any questions or you want to know anything more about Phoenix Blue Pure Analysis or intraday analysis, anything of those, just email us at info@phoenixblue.co.uk. I'm Tom Colley, and you can email me with any questions about this specific video at tom@phoenixblue.co.uk. So all that remains for me to say thank you for listening. Have a good weekend, and we'll look forward to speaking to you again on Monday. Goodbye.